Marketing Lab. We welcome you to our interactive show where we discuss about the matters that have left unforgettable impact on the world market. We're thrilled to embark on this journey with you. Today's topic, Lehman Brothers, a case study in financial collapse.
Lehman Brothers staff arrived at work in London this morning to be told the bank had been put into administration.
It is disastrous, but I think people are experienced enough and professional enough.
Today we hunt through the rise and fall of Lehman Brothers. Once a titan of Wall Street, now a cautionary tale of unchecked risk-taking and hubris. Join us as we explore the events leading up to its dramatic collapse during the 2007-8 financial crisis.
Lehman Brothers, founded in 1844 as a small general store in Alabama, grew into one of the largest investment banks in the world. By 2008, it employed 25,000 people globally and boasted 639 billion US dollar in assets. However, on September 15, 2008, it filed for bankruptcy with liability totaling of 613 billion USD.
The roots of Lehman's downfall trace back to its aggressive expansion into mortgage-backed securities and collateralized debt obligations. Despite warnings about the overheated housing market, Lehman remained bullish, acquiring mortgage lenders and recording profit records.
So our personal belongings would all be carted off into some skip and dumped at the side of the road.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
As the housing market started to collapse in 2007, Lehman Brothers faced significant challenges. The company had heavy investments in the housing sector, and as a result, its stock price, which had once reached a high of $86.18 per share, began to fall sharply. This dramatic drop whipped out billions of dollars in market value. Despite attempts to restore investor confidence and secure additional funds, Lehman's financial problems continued to worsen.
With its high leverage and massive mortgage portfolio, Lehman was hurtling towards disaster. Attempts to secure partnership and raise capital failed as investor confidence reduced and its debt burden grew.
Their book of loans, their assets. And because of that, the assets that Lehman has are being sold for basically nothing.
Its stock price tanking, Lehman, with the government's help, tried to find a buyer, but no luck. After a summer of rescues, the political appetite for another huge Wall Street bailout was gone, and the 150-year-old firm was finished.
Lehman's London office had to be closed immediately.
September 2008, Lehman Brothers was in big trouble because of the housing market crash. They tried really hard to fix things but ran out of ideas. They did things like borrowing a lot of monies and selling risky stuff to stay afloat. But none of that worked. The problem was just too big and the Lehman Brothers couldn't save themselves from going under.
On September 15, 2008, Lehman Brothers made history with its bankruptcy declaration, marking the largest such filing in US history. Its stock price plummeted by a staggering 93%, sending shockwaves through global financial market.
In 2008, we all know that if anything happened with America's economy, so that affects all the economy other world, other countries. So like that, after Lehman Brothers collapsed, people question why the US government didn't help them, especially since it have bailed out other banks. Lehman's failure had serious consequences, causing a major global recession.
In this morning's top corporate news, creditors of Lehman Brothers filed more than 16,000 claims before yesterday's deadline. Wilmington Trust, which is a trustee for various Lehman senior notes, says it may be owed as much as $73 billion.
Where are they now? Former CEO Richard Fuld now heads Matrix Private Capital Group, while Erin Montella, Lehman's former CFO, serves as an advisor at Matrix Investment Holdings and has authored a memoir reflecting on her experiences.
The Lehman Brothers crisis, which happened in 2008, shows us how taking too many risks and how everything in the world's money system is connected can be really dangerous. Lehman Brothers was a big bank that started in 1850 and became one of the largest in the world. They got into trouble because they had too much debt and invested in risky things like mortgages. When the housing market crashed, Lehman Brothers couldn't handle it and went bankrupt. This caused a lot of problems in the world's money system, like stock prices falling and people losing their jobs. It taught us that we need better rules and people watching over the banks to stop this from happening again.
The oldest money market fund in the nation wrote off roughly $750 million in bad debt issued by the now bankrupt Lehman Brothers.
Thanks for joining us on this journey through the rise and fall of Lehman Brothers. Join us next time as we explore more stories from the annals of economic history. Until then, stay curious and stay informed.